Hey Utah, last week we went over the video of the collapse of Silicon Valley Bank. They were the second biggest bank collapse in US history. And it did not stop there. The floodgates opened up. I've been saying wait for the March data information to come out so we're able to analyze that and know what kind of purchasing decision we want to make when it comes to the Utah housing market. Right here, right after Silicon Valley Bank collapsed, we see that regulators seized Signature Bank in the third biggest bank failure in US history. So now, not only did we have the second biggest bank failure, which was after the 08-09 crash, now we've had the third biggest bank failure. And the Lehman Brothers, since they were an investment bank, they're not considered, they're the biggest of all time. But we have now had two of the four biggest bank failures in 2023. Now let's scroll down here to the bottom, and I want to show you something about Signature Bank right down here. So Signature Bank was founded in 2001 as a more business-friendly alternative to big banks. They expanded to the West Coast and then opened itself to the crypto industry in 2018, which helped turbocharge deposit growth. This is unprecedented that this many banks are failing, and we almost had another bank, a large bank that had over $200 billion of assets collapse until an unprecedented bailout happened where big banks got together and bailed out the bank. We'll go over that information here. But before we do, if this is your first time to the YouTube channel, I'm Dinko the Realtor. I've been in the real estate game since 2016. I specialize in helping people just like you along the entire greater Salt Lake area, the Wasatch Front. I have people reaching out to me all the time and I absolutely love it. My contact information is down below in the description. Now let's go over this information here really quickly and what could have set up the bank failures. Well, let's take a look here. Right here, the Reserve, so the Federal Reserve.gov, credited source, right, has announced that on March 15th of 2020, the board reduced reserve requirement ratios to 0%. Effective March 26th, 2020, this action eliminated reserve requirements for all depository institutions. What could go wrong? Have all the banks go out and invest everybody's money and have nothing left in reserves. That is just unprecedented. And check this out right here. We'll go over this here really quickly. Prior to that change that was effective on the 26th of March of 2020, there were reserve requirement ratios and they differed a little bit. But right here, we see that the requirement ratios were 10%. And then it went to zero. So these banks got greedy. They wanted to earn more money. They had a 0% Fed rate, which they were just getting money for free. And hey, let's go out and spend it. Now, before we get to the next bank failure that we have to pay attention to, let me just show you what's going on in the Utah housing market. If we take a look at the blue bar, we see that inventory is still much higher than it was a year ago, same month. If we look at the black bar, we see right there that the under contracts are still much lower than they were a year ago. So we have inventory up and we have under contracts down. That is still not indicating that anything is really pivoting as far as it comes to home prices, to the value of homes, and to those multiple offers that they're trying to fearmonger you that you better jump in and buy right now. We want to make sure that we're analyzing the data and taking advantage of the market in 2023 and jumping in when you feel comfortable. Now, right here, if we take a look, First Republic Bank getting bailed out. Whoop, where did that go? Right here. First Republic Bank getting bailed out by large banks in $30 billion plan. I mean, this is unprecedented. Big. So right here, Bank of America, Citigroup, JP Morgan, Chase, and Wells Fargo are each depositing $5 billion. And banks announced in a statement, Goldman Sachs and Morgan Stanley are depositing $2.5 billion each. And these are uninsured deposits. They are wanting to bail out this bank right here from crashing. And right here, we see that the actions of America's largest banks reflect their confidence in the country's banking system. The group of 11 banks that together, we are deploying our financial strength and liquidity into the larger system where it is needed the most. They are trying to keep First Republic Bank from being another largest crashing bank in U.S. history. Other banks don't care about other banks. They don't care about their well-being. They'll buy them out, but they don't want their stocks to crashing. The stocks of all banks nationwide, worldwide are crashing. That's why these banks are getting together. It's not to do each other a favor. It's not about you and me. They care about themselves, their stocks, and their earnings. And they want to show people, hey, we believe we have each other's back. I mean, they have to have each other's back because they got greedy and started over investing. And people are out there saying, oh, hey, everything is great. No, everything is not great. Let this unravel so that you actually know what's going to happen, because this could have serious implications on the economy, on the housing market, on unemployment, on everything. Silicon Valley Bank, as I mentioned, they are the #1 funding bank for tech startups and for venture capitalists. Now, we have another bank, Signature Bank, that went crashing down, and they are a more business-friendly bank. All the business-friendly banks and all the ones that took a lot of risk are crashing. Is there going to be any other ones? Probably. So right here, if we take a look, the parent company of Silicon Valley Bank files for bankruptcy. Is that going to affect the economy a little bit more? I think so. Now, right here, we see that top Silicon Valley Bank executives worked at notoriously troubled Lehman Brothers. I mean, this is just, so these executives, so the same exact, I mean, come on. And then right here, we see that Silicon Valley Bank shareholders sue the CEO and the CFO and SVB Financial Group over fraud report. Now, if we go over to the CNBC article, we see that Silicon Valley Bank executives sold $84 million in stocks over the past 2 years, stoking outrage over insider trading plans. People keep saying this isn't going to be 08-09. Well, it doesn't have to be 100% like 08-09, but 50% of 08-09 is still going to be the worst, second worst recession. And that's going to be pretty bad. It doesn't have to be, I hate that they're using a scapegoat. This isn't going to be like 08-09. It isn't going to be as bad as 08-09. Well, if it's 50% of 08-09, that's going to be pretty dang bad. Now, right here, if we scroll down, we see, Silicon Valley Bank CEO Greg Becker sold nearly 30 million of stocks over the past 2 years, raising new question over insider stock sales. Now check this out. Becker sold 3.6 million worth of shares on February 27th, just days before the bank disclosed a large loss that triggered its stock slide and collapse. Come on now. Really? He had no idea. That is 100% insider trading, and a lot of other companies are misleading us. Just like the builders are saying everything is peachy and dandy, everything is great. Well, they're going to be misleading for their own self-gain, just like the CEO of Silicon Valley Bank. Look, if you haven't hit that subscribe button, do it now, because this kind of information analysis you're not going to find anywhere else. Do me a favor, smash that like button. It'll really help the YouTube channel grow. And until next time, have a great day.